Hello, and welcome to RightPath's Compass Corner, where we'll be talking about benefits-related information, administrative information, compliance information, Affordable Care Act, related to high turnover hourly wage workforces. This is a special partner spotlight edition of Compass Corner, where we're talking with Marcel Abbandonato from MJA Associates. We've known Marcel for several years now. He's one of our favorite people in the world. We love working with him and we love what he does. So we wanted to circle up and have a quick conversation with Marcel this morning about a couple of different things. First and foremost, the current status of work opportunity tax credits, the area where MJA and Associates specializes in. And then we'll go into kind of a specific overview of things related to work opportunity tax credits, what's unique about MJA and Associates, and what you need to be aware of as you're implementing or managing your own work opportunity tax credit or tax credit program for your company. So Marcel, thank you so much for joining us today. It's great to have you here. Always love talking to you.
Great to see you. Thank you for having me.
Yeah, absolutely. So, Marcel, let's go ahead and start off before we get into, kind of expanding on, what is the work opportunity tax credit and what do companies with high turnover hourly wage workforces need to be aware of. What's the current status of the work opportunity tax credit? This is something obviously that is legislated by Congress. They usually do this in a couple of year chunks. And as I understand it, December 31st, the current legislation for WOTC expired. So where are we at with that right now?
That is correct. So the WOTC program did expire on December 31st. So currently we are in hiatus. However, we fully anticipate that WOTC is going to be extended. There's already a bill in Washington to extend and enhance the WOTC program. Awesome. So this isn't anything that's uncommon. We've been in business for 20 years, and the WOTC program has been around for 30 years. And every couple of years, it comes up for renewal where they make modifications. Mm-hmm. So we do fully anticipate the WOTC program to be extended. We hope that the bill that's in Washington right now will get approved and Congress will take action and get this passed.
And we're obviously in a bit of an interesting partisan landscape right now, but this has historically always been a very bipartisan, issue that's been supported by both sides.
Absolutely. The program is bipartisan, supported by both sides. So it's getting a lot of support and a lot of momentum. So fully anticipated it should get extended, and it is supported by both sides.
Okay, awesome. Super helpful overview of kind of where the work opportunity tax credit stands currently as far as renewal goes. Let's dive into just some of the kind of basics of the work opportunity tax credit. Why would a company want to participate in the work opportunity tax credit program?
So the program reduces a corporate's federal tax liability, so ultimately makes it more profitable. It's going to increase our margins, increase our profit. So this is a program that was designed to help individuals that are facing challenges with gaining employment. These are individuals that are in target groups that have been designated that the government feels these individuals need help with finding employment and getting back into the workforce. So companies that hire these individuals from those target groups will get a tax credit. So what it's going to do, it's not going to be a cash or it's not a refund coming back to the employer, but it is going to be a tax credit to offset their federal tax liability.
Awesome.
And one of the biggest things about the program that a lot of businesses don't realize is that the tax credits can be carried forward for up to 20 years.
Wow.
So it's a huge benefit to have these tax credits, even if it's not going to offset your current tax liability completely for this current year. Those tax credits can be carried forward for up to 20 years.
That's huge. And how much are those tax credits typically worth?
So those tax credits, they are substantial. They range anywhere from $2,400 up to $9,600 per qualified employee.
Wow. Okay. And that's kind of one time at the beginning?
It is. So it is a tax credit that's designed for new hires. So depending on the category, in total, there's 10 different categories. Most of the categories will cap out at $2,400 per employee, but some of the other categories do exceed that $2,400 and could go up to $9,600 per qualified employee.
And obviously with the high turnover nature of a lot of these hourly wage workforce employers, I would assume that definitely works to their advantage. If you've got 400%, of the number of people coming through and being hired on a regular basis, then that probably means you have a much higher number of folks that are part of one of these target demographic groups coming through your doors.
Exactly, especially those companies that have high volume of turnover and they hire a large number of employees throughout the year.
Hmm.
Typically, anywhere from 10 to 20% of the workforce could qualify for these tax credits.
Wow,
So you can imagine how substantial that could be to their bottom line.
very
So
much.
usually, companies that experience high turnover, they could really benefit from this program.
Yeah. Okay. What are some of these target groups that typically qualify for the work opportunity tax credit?
So in total, there's 10 different categories on how an employee may possibly qualify for WOTC. But we've been in business for over 20 years, and there's been about three categories where we see most of the success.
Okay.
Number one has always been food stamp recipients, individuals receiving SNAP benefits.
Okay.
The reason behind that is that there's more than 40 million Americans receiving food stamps. So that's always been the number one category.
Yeah.
We also see military veterans. A
Okay.
lot of the servicemen and servicewomen that are transitioning from the military into the workforce, they qualify for hiring military veterans.
Yep.
And then also somebody on unemployment, somebody that unfortunately lost their job and they're receiving unemployment compensation for a short period of time. Those individuals could qualify under the long-term unemployed.
Okay, interesting. Okay, and one of the things for us, why we're so proud of our partner ecosystem and the level of experience we have is that we've definitely learned over the many decades we've been working in this space that when you add in high turnover and hourly wage, it becomes a whole different ball of wax for a number of different things, from benefits to the work opportunity tax credit. And one of the things that we love about you and MJA and what you all do is you bring the same approach we do, which is you are highly knowledgeable about this high turnover employer workspace, in this hourly wage employer workspace, and the different nuances that need to be paid attention there. So what are some of the biggest challenges you run across for these employers of high turnover hourly wage workforces when it comes to the worker opportunity tax credit?
So we've been doing this for over 20 years and we're involved with every single one of our accounts. So we definitely love working with our clients and delivering a high level service and results from the program.
Mhm.
Over the years, what I've heard from clients is that the program is very heavy with the administrative work behind it.
Mhm.
They realize that they collect the WOTC applications during their onboarding process or their application process. They get the
Mhm.
forms, they send them in, and those applications kind of fall into a black hole where they don't know the results. They don't know who qualifies, which ones qualifies, or which ones don't. So
Mhm.
with our approach, and since all we do is focus on these tax credits and incentives, what we do is we qualify and screen the employees. The biggest part, which is heavy on the administrative side, is collecting the documents to prove eligibility. So when we file the application with Department of Labor, it is much more than submitting a couple documents. We have to
Mhm.
prove that those employees qualify. So for example, if a company hires a military veteran, we have to collect those military records, that DD 214. A lot of businesses are so busy with their day-to-day operations, they get the WOTC application completed, but those documents to prove eligibility are never collected. So they don't get the results that they were expecting. Those applications don't get approved and certified. So that's a big piece that we've been able to take away from our clients, is doing that qualification, collecting documents to prove eligibility and filing
Gotcha.
those applications.
Yeah, and one of my, part of my understanding about this side of the process is that a lot of time companies go to their ATS vendor or some other part of their onboarding process, and they will say, "Hey, we've got a work opportunity tax credit add-on." But my experience and understanding is a lot of times they're doing very minimal kind of box check type thing, but they're not going after those documents, and then the employer is in a position where a lot of times they just don't have the resources to go after and find those. Do you find that to be the case quite often?
Absolutely. A lot of times companies will get the applications completed and they're working with either an ATS or a payroll provider, which are all great companies, but it's not their only core business. So because they're focusing on other areas of their business, they'll get the WOTC screening forms completed. And at the end of the day, they'll have a list of employees that were screened and qualified, but they were never converted to certificates. They were never approved because of missing documentation to prove
Gotcha.
that eligibility. So a lot of times that comes into play where a company's not getting the tax credits that they deserve or what they were expecting because a lot of these employees are just not, a lot of these applications are not approved.
That's got to be super disappointing for those companies to see, like, oh, we could have had X amount, but we weren't able to get those tax credits because we didn't have all the documents we needed.
Exactly, because they have maybe hundreds of thousands of dollars in tax credits that could have been approved, but because there's missing documentation, they're missing out on a lot of tax credits.
Yeah. Okay. If a company could recover $2,400 per individual, what do you usually see that meaning for their bottom line?
So that's huge to their bottom line because if a company is recovering $2,400 per employee, first and foremost, it's going to make them more profitable, keep more of their cash flow, and make them increase their margins. Even on the sales side, if they're out there competing against other companies and they want to reduce if they want to reduce their margin or be a little bit more competitive with their pricing to gain more business, there's some creative things that you could do with that money because on the back end you're going to see thousands of dollars in tax credits that ultimately makes you more profitable. So you can either reinvest to grow your business, maybe on the sales side just be a little bit more competitive with your pricing. So different options you could do with that money, but it could be thousands of dollars.
Yeah. So let's kind of drill down on that. I mean, obviously, every situation is going to be a little different, so you can't be super specific. But I mean, what is the difference that you see that MJA and Associates is able to make when you come in, and either they don't have any kind of WOTC solution or they've got a WOTC solution that is kind of only hitting the surface level? What kind of impact do you normally see?
It's a huge impact. For example, we were working with a company in Ohio. It's a large staffing firm. They switched over to our services, and within the first year, they tripled the amount of tax credits that they were earning. They went from $100,000 a year to over $300,000 a year in tax credits, which is a huge savings. Company's been great to work with, but they were super happy with the results, and they saw a big difference.
Yeah.
And I'm working with a WOTC tax credit provider that's been doing this for quite some time, know where to collect those documents and how to get those employees approved and certified really makes a difference.
Love that. Okay. Any other thoughts? Anything else we need to know about work opportunity tax credits?
Just really excited to see the future of WOTC. I think the bill that's been introduced in Washington is going to make a big impact. First of all, we're looking to see an extension come through, but then we're also seeing some modifications made to the program. The government really didn't take inflation into consideration over the years, so they're looking to increase the tax credits as well. So in the proposal that's in Washington right now, they're looking to increase the tax credits substantially. So we should see an increase in the amount of tax credits that companies will be earning. So in addition to that, looking to add another category. So one of the categories that they're looking to add is if you hire a spouse of a military member, there'll be a tax credit for that group. So that's what's been happening over the years. Whenever WOTC does get extended, they'll take a look at the market conditions and they'll make some revisions and either add some new categories or make modifications. So this bill that's introduced, I'm really excited to see this go through, and I think it's going to make some big changes.
Awesome. Well, thank you so much for your time today, Marcel. Obviously, from our side at RightPath, we love you and your company dearly and couldn't recommend you more highly. So to anybody watching, if you've got questions about the work opportunity tax credit or you'd like to be connected with Marcel and his team at MJA, please reach out and we will be more than happy to make an introduction. And we know that you will be happy talking with Marcel and his team. So thank you so much for your time today, Marcel.
Thank you so much. It was great seeing you. Thank you.
You as well.